Chartered Financial Analyst.
The Chartered Financial Analyst Program is a professional credential offered internationally by the American-based CFA Institute to investment and financial professionals. A candidate who successfully completes the program and meets other professional requirements is awarded the CFA Charter, and becomes a CFA Charterholder. The level of the content of the CFA program has been recognized by the United Kingdom NARIC as being comparable in level to a QCF Level 7 master's degree. However, the CFA Charter is a professional credential and is not an academic degree. The concept behind it, as well as the method by which candidates are being examined, is very different from other postgraduate qualifications, especially the academic master's and PhD degrees typically offered by universities. According to The Economist magazine, whereas there are tens of thousands of finance degrees available around the world, ranging from the excellent to the worthless, there is only one CFA, managed and examined by an American Association of Financial Professionals, the CFA Institute. It is widely considered the most difficult test on Wall Street, with fewer than 20% of successful candidates passing all three exams on their first try. Bank of America, JP Morgan, UBS and other financial services companies were among the employers with the largest numbers of CFA charter holders.
The CFA designation.
The CFA Charter is a qualification for finance and investment professionals, particularly in the fields of investment management and financial analysis of stocks, bonds and their derivative assets. The program focuses on portfolio management and financial analysis, and provides a generalist knowledge of other areas of finance. Additionally, the CFA Charter has experienced increasing relevance and demand within corporate finance. The CFA designation was first awarded in 1963. As of April 2014, the CFA Institute has about 122,664 members in 145 countries around the world, including about 112,966 CFA charter holders.
Requirements.
To become a charter holder, a candidate must satisfy the following requirements: have 4 years, 48 months, of qualified work experience, or a combination of education and work experience acceptable by the CFA Institute. However, individual level exams may be written prior to satisfying this requirement. Complete the CFA program, mastery of the current CFA curriculum and passing 3 6-hour examinations. Become a member of the CFA Institute and apply for membership to a local CFA member society. Adhere to the CFA Institute Code of Ethics and Standards of Professional Conduct. Independent of any other requirements for becoming a charter holder, the CFA program takes an average of 4 years for candidates to complete.
History.
The predecessor of CFA Institute, the Financial Analysts Federation, FAF, was established in 1947 as a service organization for investment professionals in its societies and chapters. The earliest CFA charter holders were grandfathered in through work experience only. Then, the series of 3 exams was established along with requirements to being a practitioner for several years to qualify to take the exams. In 1990, in hopes of boosting the credential's public profile, CFA Institute, formerly called the Association for Investment Management and Research, was created from the merger of the FAF and the Institute of Chartered Financial Analysts, ICFA. The CFA program began in the United States but has become increasingly international, with many people becoming charter holders across Europe, Asia and Australia. By 2003, fewer than half the candidates in the CFA program were based in the US and Canada, with most of the other candidates based in Asia or Europe. India and China have shown some of the highest growth from 2005 to 2006, with increases of 25% and 53% respectively in the total number of charter holders.
Process.
The basic requirements for participation in the CFA program, with or without obtaining the charter, include holding a university degree or being in the final year of a university degree program, or equivalent as assessed by the CFA Institute. or having 4 years of qualified, professional work experience in an investment decision-making process. To obtain the charter, however, a candidate must have completed a university degree, or equivalent, and 4 years of qualified, professional work experience, in addition to passing the 3 exams that test the candidate's knowledge of the academic portion of the CFA program, as discussed below. However, an accredited degree may not be a requirement. Candidates take 1 exam per year over 3 years, assuming a pass on the first attempt. Fees as of December 2009 for each exam range from $710 to $955, depending on the date on which the candidate registers to take the exam, plus an additional $400 to $480 for program enrollment for new members. Exams are challenging, with 38% of candidates passing the Level I, 42% passing Level 2, and 52% passing Level 3 exam in June 2012. Level 2 and 3 pass rates apply to candidates that must have already passed the prior Level S. From 1963 to 2012, a total of 950,221 candidates have sat for the Level I exam, with 152,035 candidates ultimately going on to pass the Level 3 exam, representing a weighted average completion rate of 16%. From 2003 to 2012, the completion rate was 14%. It could be argued that the completion rates from 2003 to 2012 may be skewed lower due to the presence of recent candidates who have yet to sit for the Level 3 exam. However, the long-term completion rates offer a more unbiased estimate, suggesting that only 1 out of every 7 candidates manages to eventually complete the program. All 3 exams are administered on paper on a single day. The Level I exam is administered twice a year, usually the first weekend of June and December. The Level 2 and 3 exams are administered once a year, usually the first weekend of June. Each exam consists of 2 3-hour sessions. Level I has 240 independent, multiple-choice questions. All information required to answer the question is contained in the question. Level 2 has 120 multiple-choice questions, organized as 26 question item sets, each set having its own vignette of facts. To answer each question, the candidate must refer to the vignette as there is insufficient information in the question stem. Level 3 consists of a session of constructive response, essay-type questions, and a session of 10 6-question item sets as in the Level 2 exam. On the multiple-choice item set sections, there is no penalty for wrong answers. For the test, only 2 models of calculator are allowed, the Hewlett-Packard 12C including the HP 12C Platinum, and the Texas Instruments BA2 Plus including the BA2 Plus Professional. Candidates who have taken the exam receive a score report that is intended to be fairly unspecific. There is no overall score for the test, only a pass-fail result, and a range within which his or her performance for each topic area falls, below 50%, between 50% and 70%, and above 70%. Failing candidates are informed of their decile rank within the body of failing candidates. The passing grade for the exams had been defined as 70% of the top percentage of exam papers until 1989. Since then, the grading method is not explicitly published and the minimum passing score is set by the Board of Governors after each exam. The Board of Governors reviews the results of the standard setting process and input from psychometricians. Standard setting is a process that defines the passing score of the exam. The CFA exam uses the modified Anjoff method, which is a commonly used approach to setting standards for certification and licensure examinations. Subject matter experts review the exam and recommend a minimum passing score for the just qualified candidate. The minimum passing scores are presented to the Board of Governors in a report. The Board of Governors is not bound by this recommendation, but does recognize it as a very important information.
CFA-approved university programs.
CFA also has a list of accredited education partners who provide relevant courses in CFA education preparation. There are 60 partners in North and South America, 39 partners in Asia Pacific, and 49 partners in EMEA.
Curriculum.
The curriculum for the CFA program is based on a candidate body of knowledge established by the CFA Institute. The curriculum comprises the topic areas below, and, as mentioned, there are 3 exams, levels that test the academic portion of the CFA program. All 3 levels have a strong emphasis on ethics, while the material differences among the exams are: the Level I study program emphasizes tools and inputs and includes an introduction to asset valuation, financial reporting and analysis, and portfolio management techniques. The Level II study program emphasizes asset valuation and includes applications of the tools and inputs, including economics, financial reporting and analysis, and quantitative methods, in asset valuation. The Level III study program emphasizes portfolio management and includes strategies for applying the tools, inputs, and asset valuation models in managing equity, fixed income, and derivative investments for individuals and institutions. For exams from 2008 onward, candidates automatically receive the curriculum readings from CFA Institute when they register for the exam. There is no possibility to register for the exam without receiving the curriculum. There is also no possibility to order the curriculum separately. If the student fails an exam and has the possibility to resit in the same year, CFA Institute offers a slight rebate and will not send the curriculum again. The curriculum only changes from one year to the next. However, if the student resits in a year other than the year of failure, they will receive the curriculum again as it may have been changed. Study materials for the CFA exams are available from numerous commercial learning providers, although are not officially endorsed.
Ethics.
The ethics section is primarily concerned with compliance and reporting rules when managing an investor's money or when issuing research reports. Some rules pertain more generally to professional behavior, such as prohibitions against plagiarism. Others specifically relate to the proper use of the designation for charter holders and candidates. These rules are delineated in the Standards of Professional Conduct, within the context of an overarching code of ethics. See sidebar.
Quantitative methods.
This topic area is dominated by statistics. The topics are fairly broad, covering probability theory, hypothesis testing, multivariate, regression, and time series analysis. Other topics include time value of money, incorporating basic valuation and yield and return calculations, portfolio-related calculations, and technical analysis.
Economics.
Both micro and macroeconomics are covered, including international economics, mainly related to currency conversions and how they are affected by international interest rates and inflation. By Level 3, the focus is on applying economic analysis to portfolio management and asset allocation.
Corporate finance.
The curriculum includes the more fundamental corporate finance topics, capital investment decisions, capital structure policy, and dividend policy, as well as advanced topics such as the analysis of mergers and acquisitions, corporate governance, and business and financial risk.
Financial reporting and analysis.
The curriculum includes analyzing financial reporting topics, international financial reporting standards and U.S. generally accepted accounting principles, and ratio and financial statement analysis. Financial reporting and analysis of accounting information is heavily tested at levels I and II, but is not a significant part of Level 3.
Security analysis.
The curriculum includes coverage of global markets, as well as analysis of the various asset types, equity, stocks, fixed income, bonds, derivatives, futures, forwards, options and swaps, and alternative investments, real estate, private equity, hedge funds and commodities. The Level I exam requires familiarity with these instruments. The focus of Level 2 is valuation. Level 3 studies incorporation of these instruments into portfolios. Level 2 employs the tools studied under the quantitative methods, financial statement analysis, corporate finance and economics curricula.
Portfolio management.
This section increases in importance with each of the three levels. It integrates and draws from the other topics, including ethics. It includes modern portfolio theory, efficient frontier, capital asset pricing model, etc. Investment practice, defining the investment policy for individual and institutional investors, resultant asset allocation, order execution, and measurement of investment performance.
Legal and other recognition.
The Society of Actuaries, SOA, granted the credit of validation by educational experience, VEE, economics to the candidates who passed the CFA Level I exam. SOA also granted both the credits of VEE Corporate Finance and VEE Applied Statistical Methods to the candidates who passed the CFA Level II exam. New York Stock Exchange, granted CFA charterholders the option to take only the portion of the supervisory analyst examination dealing with exchange rules on research standards and related matters. U.S. Securities and Exchange Commission, SEC, may grant exemption of the Series 86 testing requirements to financial analysts passing the CFA Level II examination who also meet other requirements of the Financial Industry Regulatory Authority, formerly known as the National Association of Securities Dealers, or NASD, to register as a portfolio manager in Canada. Under National Instrument 31-103, registrants must hold the CFA and possess relevant experience, or alternatively, the Canadian Investment Manager designation, which is less popular. CFA charterholders are recognised by UK's Chartered Institute for Securities and Investment, CISI, as the equivalent level of CISI full membership, MCSI, or fellow membership, FCSI. Full membership of CISI is recognised by several national investment professional bodies such as Hong Kong's Securities Institute, HKSI, in Hong Kong. Taiwan's Financial Supervisory Commission, FSC, has approved the CFA designation with 2-year practical working experience and passed the test of regulations of securities investment trust and consulting enterprise and the test for common knowledge of financial markets and professional ethics, the common subjects, as equivalent to a local recognized industry qualification of Certified Securities Investment Analyst, CSIA, in Taiwan. After reviewed and approved by Securities Investment Trust and Consulting Association, SITCA, the Academic and Accreditation Advisory Committee of Hong Kong's The Securities and Futures Commission, SFC, has approved the CFA designation as a recognized industry qualification for the licensing of responsible officers in Hong Kong. CFA charterholders who meet the competence requirement, which include both education training and work experience, may apply to register with the Hong Kong Business Valuation Forum, HKBVF, as Registered Business Valuer, RBV, in Hong Kong. CFA charterholders are recognized by HK's Hong Kong Securities Institute, HKSI, as the equivalent level of HKSI full membership, MHKSI. CFA charterholders are recognized by Professional Risk Managers International Association, PRMIA, as the equivalent of passing first 2 required exams. Exemptions are available for various modules in the South African Registered Persons Examination, depending on the candidate's level. No exemptions are available for the examination on local market regulations and compliance. CFA charterholders are recognized by Brazilian main regulator of securities analysts, APIMC, as the equivalent to their global content test, although the candidates must still pass a local content test to award their memberships.
Trademark disputes. India, ICFAI University and AICTE versus CFAI.
CFA Institute is strictly not affiliated with the Chartered Financial Analyst degree offered by the Institute of Chartered Financial Analysts of India, ICFAI, University of India or its affiliate, the Council of Chartered Financial Analysts, CCFA. In 1998, CFA Institute's predecessor organization, AIMR, sued and won a judgment against ICFA-ICCFA. The judgment prohibited ICFA-ICCFA and its members from using the CFA or Chartered Financial Analyst mark in the United States and Canada. In August 2006, An Indian court issued a temporary injunction against the Indian organization as well. The judgments made no assessment of the quality of the Indian program and merely discussed the trademark violation. The Indian Association of Investment Professionals is the only organization in India which is affiliated with CFA Institute. CFA Institute trademark rights to the CFA and Chartered Financial Analyst brands have been recognized in India by the Delhi High Court. Further, the Delhi High Court issued an interim injunction ordering ICFAI and its affiliated Council of Chartered Financial Analysts to stop using CFA Institute trademarks. The Deputy Registrar of Trademarks did recently determine that a trademark registration issued to CFA Institute for the CFA brand must be republished because of an error by the Trademarks Registry. CFA Institute has numerous trademark applications on file with the Trademarks Registry, and CFA charterholders from CFA Institute are free to use the CFA and Chartered Financial Analyst marks throughout India. On May 8, 2007, the U.S. District Court for the Eastern District of Virginia vacated a default judgment issued against ICFAI that CFA Institute obtained in October 1998. ICFAI recently moved to reopen the case and to vacate the default judgment because the court lacked jurisdiction over ICFAI at the time the default judgment issued. With the default judgment vacated, ICFAI informed Indian CFA charter holders that they could legally use their charter in the US and Canada. However, on September 4, 2007, the court reversed its decision to vacate after a motion to reconsider that decision was filed by CFA Institute. The latest update on the CFA Institute's legal battle in India can be found from the interview of Dr. Ashwin P. Vibhakar, Managing Director of the CFA Institute.
United Kingdom, Trademarks Registry vs CFAI.
In January 2007, the Trademarks Registry, UK refused to grant protection to the CFA trademark, as the word chartered in the United Kingdom is associated with royal charters.